Hi, my name is Ayman Aitani. I'm a business growth specialist, and today I'm going to talk to you about how to best structure your startup pitch for an investor. I've been on both sides of the table. I've been with the investor, helping them look at specific things within the business, and then I'm on the startup side as well, where I help the startups look at how best to position things for the investor for it to make sense. And most of the issues that I find with these startups is that they try to overcomplicate things, and they try to hide behind buzzwords and things like they try to make it more complex than what it is. And investors see pitches every day, and they look for very specific things so that they can make a decision about moving to the next level. The next level, not funding. The next level is saying, okay, you have something there. Let us talk more to see about what that means. So I'll be covering with you an outline today that has been working very well for many of the startups that I've been advising. And it's a way to really cut it short and simplify what is it that you're trying to do. At any point in time, if you have any questions, you can include those in the comments, or you can DM me later on Instagram. I'll be happy to answer your questions. So one of the first aspects is introducing your startup, the problem you're solving, the case study. I'll be zooming into each. The target market and the market opportunity. How are your customers solving this problem before you? How does your business work? Your traction and growth indicators, your competitive differentiation, the team, and the business model that you have. What's your go-to-market plan? What are your financials like? Your cap table status, and the ask, what you're asking for. Now, one of the key elements that is very important is don't include any buzzwords. Nothing, zero. I know it's very tempting for all startups to do so, and they do this almost every turn. It is very important not to include any buzzwords. So don't start with, we are the Uber of, the Careem of, the Airbnb of. Don't use terms like democratize, disrupt, game changer. Stay away from think outside the box, unicorn, IPO, and capturing 1% of the market. All of this is overused terms, really overused terms. So hustle, next level, next generation, blockchain, AI, all of this it doesn't mean anything. All right, so stay away from the buzzwords. Focus on your grandmother, your teta, not your mother, your grandmother. How would you explain your business to her? So let's say she invited you over the weekend for a heavy lunch, and then after lunch she's like, tell me teta, khabarni, what is it that you do? Are you going to tell her, Teta, we're the Airbnb of this, we're the Uber of that, we democratize this, we blockchain or AI that? No, you just go with some very simple terms that says, we buy this, we sell that, we target these people, we do this in a very short and clear, non-buzzwords way. So always keep your mind, your grandmother, in your description of your startup. Stay away from the unnecessary buzz of things. Then talk about your solution. What problem is your business solving? And link it specifically to the person that you're solving it to. So what are we solving? What is the specific problem that we're solving? I know you have a 3-page feature set of things that you can do, but what's the core problem that you're solving? You're helping people with their transportations from point A to B. You're helping people with their delivery and fulfillment if it's e-commerce space. You're helping this. So a very specific solution for what you're trying to solve. And how were the customers solving the problem before you? They've been always, so even before your company existed, people had this problem and they've solved it. I know that might not help your ego a lot, but people have been solving that problem you're trying to fix. They've been solving it very crudely. It could be Excel, it could be manual, it could be with people, doesn't matter, but they've been solving it. So it's important to flag to the investor, what is it how do they solve it today without you, and how you're helping them solve it better. Then go into a case study. Case study meaning spotlighting one or more business use cases of certain customers that you have. So ideally you have one or two customers that you can really highlight. You'd say, look, this customer are in this spectrum, in this space, and they tried before us, they used to use spreadsheets and people to do 1, 2, 3, and 4. With our startup, let's say you'd say that this is how they solve it now. So if you include that case study and you talk more about how you've solved it for them, it would definitely help clarify what it is that you're doing and how you're able to solve it. So this will help position your startup to the investor of how you've solved it in real life examples. The target market. The target market don't do the common mistake that I see is of startups. They claim they solve everything from 18-year-old to 65-year-old for men and women in all countries. That is never the case. So be specific about your initial target market. So start first. So what's the easiest and the most common target market you're going to go after, and then you'll grow it. So if you look at Kareem, for example, Kareem's initial starting point was for corporations. They had a corporate model where they solve. So if you are a consulting company and you have many people who travel within the city or to other countries, you used to use Kareem's interface to book rides from place to place. And then they opened it up to the public. And even within the public, it was for business rides. And then they added Kareem Kids for mothers who needed to get around the city with a car seat in the car. And then they added a few more other verticals as well. But start with an initial target market, be clear what that market is, and then move into the additional sub-targets that you want to look at. How does it work? They don't need to see your backend infrastructure. They don't need to go through all of that aspects. Just go through the flow of what does the customer do, what do you do technically in the background, operationally, what does your operations team do, and what does your billing do. So that flow of they sign up. Let's take Kareem as an example. You sign up, and when you place an order, the system in the back end checks the closest rider to you. And then they match you, and then when you match, and when the driver says trip complete, that's when the billing is done and you're charged. So that simple flow of how does it work. What investors look for a lot is traction. So what growth indicators do you have? What is it? What type of growth do you have? And that growth could be in terms of bookings, it could be return bookings, it could be retention, it could be, if you're early stage, you can look at signups. So they want to see, the growth that you've been doing over a certain period. The period could be 3 months, it could be 3 years, depending how long you've been in business. When you want to differentiate yourself, this is a common mistake I see, where startups, they say they have themselves all in green, with we do this feature, that feature, that feature, and so on, and then everybody else is at red because God forbid there's somebody like you who's great and so on. So this is a very common aspect. So I would look at what are the key aspects that really differentiate you, and it can't be a feature. It can't be a feature. If you look at Snapchat stories that we all use, so that's a feature, and that was Facebook use it now, Instagram use it now, WhatsApp, LinkedIn, YouTube have that format. So it cannot be that, it can't be a feature. It has to be a core offering that differentiates you. And then talk about your team. And the team have a bio as in what is relevant. So if they used to work for companies that solve this. So for example, you're in tracking devices for health, and one of your founders used to work for one of the major tracking device companies, for example, or you're a direct-to-consumer brand, and one of your founders used to work for one of the top marketing companies, or for the acquisition channels such as Facebook and Google and so on. So what is relevant in that case from the team perspective? And a key aspect as well is unit economics. Unit economics defines your business, which basically is how much does it cost you to make, how much does it cost you to get the customer in terms of marketing efforts, and how much does it cost you to sell. If you've watched any Shark Tank episode, you'll see that the sharks are not in. So when you have a founder who comes in with an idea that they don't necessarily agree with, you see that the sharks are not engaged. They're not very engaged with the pitch of the startup. But then as soon as that founder talks about their numbers, about how they're doing great in terms of their numbers, you'll see that the attitude change, they have smiles, they ask, they react, and so on. So they look for that traction, and they look for the unit economics. So they ask questions about how much does it cost you to make, how much does it cost you to get a customer, which is the CAC, cost of customer acquisition, and how much do you sell it for. So very simple. If you sell shirts, every shirt is for 100 dirhams, you sell it for 100 dirhams. If it costs you 20 dirhams, in terms of clothing and making it or for buying it. And if it costs you another 15 dirhams to acquire the customer, that's 35 dirhams, and you sell it for 100, that means you have a nice spread to go from 35 dirhams to 100 dirhams. But if you sell for 100 dirhams and the shirt costs you 80 and the cost of acquisition is 15, that means you barely have 5 dirhams as a cost of spread. So that's something that you have to be very careful when it comes to that. The go-to-market plan, this is a common mistake I see, and with founders. What they do is they say, we're going to be, so this year is in the UAE, next year in Saudi, the third year we're going to be in Brazil, and the fifth year we're going to be in Malaysia. It's like, finish one city. Don't even talk about country. Finish one city. Choose one city that you're in. Dubai, Abu Dhabi, Sharjah. What city are you in? Do very well there, and then talk about growth. And so when you want to talk about your go-to-market plan, look at your 12 months. So look at only 12 months. So in 12 months, are you going to grow in your existing city? You might add another city. I'm talking cities, not even countries. So be realistic about what you would look at in terms of your growth, because so many things change in those 12 months. And the financials, you look at the financials of your business. Where do you stand now in terms of your financials? What are your costs like? What's your revenue like? What's your burn rate like? How much you're paying for staffing and servers and things like this. So just an indication of your financial state today. The cap table. The cap table is something that you can choose to include in your pitch, or you could choose to exclude it. The cap table is, how's your equity structure today? So who are your owners in your company? It's usually 2 founders and a few angel investors. The reason I bring this up is many investors shy away from a complex cap table. So the cap table has so many smaller players, and so you have so many entities that are part of the cap table and so on. It discourages them from actually investing, or they have so many questions for you before they can go to the next level. So I would be clear about my cap table, what my cap table looks like, and what changes would that make. And the ask. When you're saying for the ask, here be very clear. Are you asking for funds? If you're asking for funds, be very clear how much of the funds are and how are you going to spend them. Are you going to spend them 30% on marketing, 20% on product development, 15% in team, whatever it is. Just be very clear about what the ask is. Are you looking to build a partnership? Be clear about the partnership. Not saying, I want to partner with you, Mr. Bank. I want to partner with you, Miss Mall. Be very specific about what type of partnership, what does that include, and what are you planning to do with that. And on the aesthetical side, font size 32. I know this is something a small detail, but I push it a lot because most startups make the assumption that people are going to easily read it on a screen, read their pitch, they're going to print it out and go through it. I make the assumption that they're seeing it on the go. The investors are seeing your pitch on the go on a mobile device. So even if you pitch to an investor, he or she has to share it with the rest of their investment team in order to look at this. And they're going to look at it from their mobile device. So what I suggest is look at having a font size of 32 and above. 32 is huge, but I've been presenting across so many cities and so many horrible resolutions, from rooms with 3 people to rooms with 600 people, and projectors that are low resolution to high resolution. That font size of 32 and above has never failed me in terms of people can read it on the screen, they can understand it, and you're sharing that information on top of this. Don't do any of the animations and transitions, using PowerPoint things or Prezi or so on. So all of those transitions, they tend to delay, they tend to bother on mobile, and they include an element of complexity of things that can go wrong. And also the images that you use, any images you use need to be your images. So don't go to, this basics of 101 of research and publication. So don't go into images, Google Images, and choose images off the internet. Go to a stock image location like Shutterstock, Bigstock, whatever it is. There are so many stock image options for you to choose from, to choose high resolution images for you to use here. And it also helps that once you have your pitch ready, that you work with a designer and a copywriter to finalize your presentation. There's so many pitches that I see that have these poorly designed images, although they're very good startups, but you cannot see behind the messiness of what it is, like low resolution images, unclear images, the design is horrible. It's very difficult to really go through what it is. And so I'd always recommend that you have a designer and a writer just to fine-tune. You don't want to lose the attention of people over small things such as text and image and font and things like this. And investors are different, and companies that you're pitching to are different if you're looking for partnerships. So I would look at what they're interested in. So if they are more on the sustainable, they have a sustainable focus as a fund, I would include aspects of that in my pitch. So don't do the mistake of founders. What they do is they have the same pitch deck. They've been using it for 2 years across all of the investors that they meet. So I would look at that. So that summarizes overall what it is that we're looking to do in terms of structuring it, of structuring things. So so how you structure your pitch. This is what we've covered today: how to structure your pitch. So introduce your startup. What's the problem you're solving? A case study, 1 or 2 slides from your customers. What's your target market? How were your customers solving this problem before you? And how does it work? What are your traction and growth indicators? What's the competitive differentiator that you have? And your team. So relevant things about your team for doing this. What's your business model? Which is basically your revenue structure, unit economics, things like this related to how much money you make, how much do you sell it for, what's the cost of acquiring a customer, and the go-to-market plan. What are you going to do? How are you going to, what's your plan of the next 12 months to go to that? Your financials, how much, what your financials look like, and your cap table status, and your ask. If you have any questions, please let me know. I have a question from Ahmad. Ahmad is asking how long the pitch should be. So there are 2 aspects of length, Ahmad. There's the duration, how long your pitch needs to be in terms of time. The other aspect, Ahmad, would be in terms of the number of slides. So the general rule is the shorter the better. Many founders, they have a pitch that is for 30 minutes and an hour. One, is very difficult for you to get that enough face time with an investor. 2, even if you do, our attention spans are less than 10 minutes. So you're trying to get something very clear from the beginning about where you are, what you do, and if you follow the structure I mentioned, you'll be able to structure it this way, and you're able to finish it clear. Now, I've had many founders be able to pitch within 3 minutes, and these are big businesses. They've been running for a few years. They have a lot to share, and I've had them bring it down to 3 minutes. In 3 minutes, you cover the basics of who you are, who you're selling it for, what's your traction like, what is it you're looking for from the investor, what's your growth plan going to look like, and so on. Those are the key aspects, and then you open it up for questions. So because they're going to have a ton of questions based on the investor's experience in investing and other things like this, and so on. So because they see startups like you all the time. So in summary, Ahmad, how long the pitch should be, the shorter it is, the better. And in terms of the number of slides and the number and how much time that you have. I'd also recommend that you have like an appendix on the side. It has additional slides. So just in case something comes up in the Q&A and the questions and answers, and you can bring it up from your appendix, but your core offering to be around 4 to 5, 4 minutes, 5 minutes, 3 minutes, if you can. So definitely less than 10, definitely less than 10 minutes in terms of a pitch. And also abide by the guidelines we spoke about the design and the flow that we spoke about. Thank you, Ahmed, for your question. If there are any other further questions, I'm happy to answer them if you comment, if you put those in the comment section, or I'll be happily answer them for you via Instagram DM later on. So thank you for joining today. If there are no questions, so thank you for joining today. Keep in mind always that investors see hundreds of people like you every week and every month, and differentiation for you is how you structure things in a very clear way, as in the guidelines that we've shared together. If you have any questions, please do that over Instagram DM. And thank you for joining today. I'll be sharing this by email by the